Hi, I'm James Pacholek at CMG Wealth Management. It's October of 2022, and what a year we're having. One for the record book, seemingly. In today's video, we'd like to share with you our thoughts and insights to the current market. Why are stocks down double digits and bonds down double digits at the same time? How did we get here? What steps did CMG make for their clients, and how might those benefit you in the future? First of all, let's look at a few numbers. Currently, the S&P 500 is down approximately 25%. The NASDAQ is approximately over 30%. And more shockingly, we have a bond index that's down approximately 17%. How rare is it for stocks and bonds to finish a year both being down? Well, the last time it's happened was 1969. And there were single-digit losses for the bond and the stock market. Right now, and of course the year is not over, we are faced with double-digit losses in both. This would be the first time that stocks and bonds finish down double-digit in a calendar year. So how did we get here? Simple as this. The Fed and Congress, in response to the pandemic, pumped trillions of dollars into the economy. And with that, you superheated an economy that caused prices to go up. Congress and the Fed told us that it would just be transitory, but it looks like now that's not the case. And not only is it not the case, but we've got inflation that is at a 40-year high. So at CMG Wealth Management, we do not believe that buy and hold is the only viable approach to investing. We do believe in buy and hold, but also believe there are times where things are presented to us, when market events unfold, that we have to look at those situations, look at the risk, look at the opportunities, and we believe that you make tactical shifts so that you can take advantage of those downturns. If you simply just write everything down and write everything back up, you cannot take advantage of those great drawdowns. So when you look also at the Fed, typically when things go wrong in the market, like they did back in 2018, for example, the Fed was raising rates, the market sold off about 20%, and the Fed pivoted and they went and said they were going to keep raising rates, but then they changed their mind. But we didn't have inflation at that time. And so there's an old adage, don't fight the Fed. And with the Fed set to keep raising interest rates, and that's the narrative, all of them are sticking to it, that as the Fed raises rates to fight inflation, the chances of toppling the economy are great. And so we believe that faced with those things that we've never seen before, and let me say it like this, when you're with all that unprecedented stimulus and bond prices and stock prices at all-time highs, when you're faced with things you've never seen before, you have to question your ability to predict those outcomes. There are limits to stock and bond allocations. There's limits to diversification just between stocks and bonds, which we are seeing very clearly this year. So at CMG Wealth Management, we'd like to share with you the investment steps that we took. We reduced our bond allocation in 2021 dramatically, and then we reduced our stock allocation in the beginning of this year. When you're faced with those things and making those moves into money market, that has been the saving grace for our clients. And we'd like to share with you those strategies because as time goes on, we're going to be faced with similar markets in the future, and we believe our strategies will benefit you. So feel free to contact us over the web or at our office. Set up a time to meet. There's no obligation. We'll simply share with you how we feel like we can help you. We'll answer any questions you have and hope that we can have CMG Wealth Management work for you. Thank you for your time today. Take care.